Our market master of the day is with us. Gautam Shah is founder and chief strategist at Goldilocks Premium Research. Gautam, good morning. Good to have you with us here. Thanks very much. We seem to be in a bit of a waiting room, Gautam, waiting for the next move, up or down. The index over the last couple of days seems to have also quietened down, although from the lows, we got a 1,000-point move up and then a 1,000-point down move, and we've retraced that quite nicely. Where does it leave us? I'm talking about the near term, next one and a half odd month, because in this time frame, you'll also have the election results. Gautam.
Good morning, Prashant. Well, I think the waiting room is much better off than going downhill. I think that's something which people would not mind. And it's just not been the last few days. It's actually been the last 4 months because we've been in this, band of about 1,000 points. We've oscillated between greed and fear. 22,300 has been a sort of a marker number. We go 500 points above that. We go 500 points below that, and there is no follow-up. But I think this is just quality consolidation that has taken place. The market is showing a lot of maturity. And the way we have handled two major geopolitical developments in the last 5 to 6 months, it just tells you that this domestic liquidity angle is really bailing out the market every single time. So I just see this as consolidation. I think the problem is there is no real leadership because banks are not doing well. Reliance is unable to get past 3,000. The IT index hasn't been able to do well. But I think the comeback in the last 1 week tells me that the market breadth is back because in general, themes have done well, stocks have done well, but the indices have not gone anywhere. And I think once we get past 22,500, 22,800, which I think will eventually happen, then possibly you'll see the next 5-6% move. But the trade is still not about the Nifty and the Bank Nifty. Stay with the outperforming sectors, and I think there is still a lot of money to be made.
Oh, yeah, absolutely, no doubt. Pull up UBL. I just want to make a quick mention before I toss it to Sonia. UBL is up another 3%. It was a big mover yesterday. We were discussing this with our technical analyst in the morning and Deepan as well. So another 47.50 rupees coming through there, 20.78 on that, backed by volumes as well. Sonia.
It's hot, right? I mean, this summer, the demand just goes up across the board, right, for stocks like UBL. But Gautam, hi, good morning, and thanks for joining in. This is a out-and-out bull market, right, we're looking at. We haven't got any major dip in the last 1 year. It's climbed every wall of worry, as you just said so yourself. So what do you do now? Do you continue to buy, hoping that as we head into election season, as perhaps, the incumbent government comes back to power for the third time, do you think that will give a fresh lease of life to this market? Or are you starting to get a bit cautious at these levels?
Well, I think it's a bull market where you don't need to overanalyze. I think you just need to stay in the bus and not thinking about getting off on every single correction that happens from time to time. And I think all of us pretty much agree that election is in some sense a non-event. So in that sense, I don't think the market is very excited or worried about it. I think we're just going through the motions over the next 4 to 6 weeks. And whatever the outcome, we pretty much have some sense. I think the markets should be okay. So that might not be a big trigger. I think the big trigger is really going to be earnings and whether the Indian markets can actually, deliver on the fundamentals because, we've really run ahead of ourselves in the last couple of months. But I do believe that, if you compare with the last bull market, wherein you routinely saw corrections of 10 to 15%, 5% has become the normal 15%. So in that sense, I think this shakeout, internal rotational shakeout that happens from time to time just makes the market healthy. So stay with the right pockets. I think the index is safe till we are above 22,800. Until that number is safe, I think long-term investors should just, look at this market and stay with this market going forward.
Okay, all right. Hi, Gautam. Just hold on to that thought. I want to focus on Tata Chemicals. China's soda ash prices are up by close to around 5% today. So that could be the stock on the radar for the time being. It's trading with some mild gains, but just keep an eye on that one. Tata Chemicals is the stock that we're talking about. Soda ash prices up 5% today. Sometimes in the near term, it does have some kind of impact as well. Well, Gautam, I wanted your view on a couple of these big movers. Particularly in today's trading session, we have fundamental news that's putting pressure on Kotak Mahindra Bank. And the stock is down close to 10%. But otherwise, it's been an underperformer as it is. On the charts, how's it looking? At some point of time, value will emerge. It trades at around 2.5 times price to book. So there could be some derating. But fundamentals aside, technically, how's that one looking?
Nigel, the market knows best. I think whenever I've spoken to a lot of HNIs and corporates, I think the key takeaway is that Kotak as a stock hasn't done anything in the last 2 years. In fact, it's been a bigger underperformer than even HDFC Bank that we talk about. I think in some sense, the market knew that there was a problem somewhere, and probably the news is now out of the way with what has happened in the last couple of days. But this is a market where you don't touch underperformers, because then you don't generate alpha in your portfolio. And as you know, we've been a very big bull on SBI, and we continue to believe that that is the banking stock you need to focus on for the rest of the year. But otherwise, all other banking stocks, I think, stay away, because the bank Nifty also seems to be in a range of about 46,000, 48,500. Until we don't get past the range, I don't think you're going to see any fireworks in the banking space. So SBI in the PSU names and ICICI in the private names are the two banks we are betting on. But I do believe that metals is still the trade of the year. I think I spoke about it in the last interaction as well, and it's had a fabulous run. I think this is going to continue.
Gautam, so where is the momentum? Where is money going to be made? Give us ideas.
Yeah, so I think there are three themes that we like. Metals, as I said, I spoke about it last time. I think this is a structural trend. A lot of people whom I speak to are not unable to join the dots from a technical and fundamental standpoint, but now the fundamental triggers are gradually coming in. And you've had amazing moves in stocks like JSPL, Vedanta that we covered recently, Hindalco, Nalco. SAIL has been a favorite, and I do see that stock doing very special things over the next 6 to 12 months. So I think the metals index is set for another 10 to 15% upside for sure. The other high conviction idea that we have is chemicals. I think that's a space that has come back strongly in the last few days. SRF, Tata Chemical, Deepak Nitrate, Aarti Industries, all very good stories coming out of 2.5 years of consolidation. So metals, chemicals, pharma, and select banks and select PSUs are the spaces that we like.
Chemicals, are they out of the woods, you think? Or this is a turnaround bet? When you look at technicals, I mean, you're supposed to bet on sure things, right? So when you're saying that you like it, I mean, I'm assuming it's turned the corner.
Yes, Prashant, I think the way we do our technical analysis, it's not just views, it's commitment. And I think we are committed into chemicals because we feel that this time is indeed a genuine breakout. So I do see a 10 to 15% move on the entire chemicals index, which is a custom index that we prepare at Goldilocks. And some of the top stocks that I highlighted, I think could do special things. It's just that they were the poster boys in 2020, 2021, lost their way, went through a large correction. Now coming back, there is a lot of tailwind fundamentally as well. And given the China factor, I think there are feelers on the charts that the uptrend, which started in 2020, is now resuming. So all the top quality stocks in chemicals should do well over the next 6 to 12 months.
Got it. You were bullish on the auto sector for the longest time, and that is a space that has done really very well. But I don't see it in your bullish list anymore. Do you think the run is done there?
Yeah, I think auto and real estate were our favorites, a year back, and they did very well for us. And now I think we've come to a point where a risk reward does not justify taking aggressive bets in the auto space, whether it's an M&M or a Tata Motors where the story is played out. But there are two stocks that we like and we actually recommended recently to our clients, and that is Eicher Motors and Escorts. And I think these two stocks could do special things along with Maruti, which seems to have now got into 5 figures comfortably. It was toying with that 10,000 level for a very long period of time. And now that becomes a base. So these three names in the auto space, I think could generate alpha for your viewers over the next 6 to 12 months.
Gautam, when I asked you about chemicals, the only reason I'm asking is because it's one of the few spaces which is underperformed, right? So when you put out that call on chemicals, it's not just people who are chartically inclined who are going to be listening to you. It's also going to be the value guys, the fundamental guys who are going to try and match their views in terms of what the turn is and what you're seeing on the prices. So good to get that. Thank you very much, Gautam. Good chat as always, and appreciate your time here on CNBC TV 18.